index is not. So let's quickly bring on board our experts. We've got Kunal, Vora on the fundamentals, Kunal, Nooresh on the technicals. Kunal, anything to worry?
I think as such, I believe it could be just about, again, a consolidation for the indices. Till the time we don't break below the major support on the index, the view and the bias would still remain on the bullish side. The only disappointing fact for the markets today is the lack of participation from the likes of HDFC Bank. I think less than a 0.5% move for HDFC Bank post results. I think it's something of a disappointment. Yes, there are many other large cap names like Tata Motors, L&T, etc., which are also ebbing off today. But I think whether it's a short-term correction or whether it's a major downtrend into these names, that we'll come to know maybe in the next couple of days. So as of now, the view on the index remains to be on the slight neutral side. If we close above 16,800 mark, that's where I would believe that the view would start to become a lot more bullish.
Okay, so that's the take coming in at the index level and some of the large heavyweights as well. But Nooresh, your take as far as, some of these oil and gas names are concerned, Chennai, Petro, MRPL, Oil India, all of these are seeing quite a bit of spike. Which is your favorite?
So a lot of these names are breaking out. The whole sector is breaking out. Oil India looks the most interesting one. I've been recommending it for some time now. The stock has given a breakout above the highs made in last June. That is the time where crude reached that 130 mark, and post that the stock corrected and remained sideways, and now we are breaking out over those 300 315 marks. So this could ideally be a slow and steady candidate towards 370 to 400. So Oil India looks interesting. MRPL as well as Chennai Petro have already moved up quite a bit for the day, but on dips they still look interesting. The trend is pretty strong across the board in this pack. The other names are to be looking, continue to look at the other gas names like IGL and GAIL.
Point taken. Kunal Vora also joins us on the show. So let's take the discussion forward. He's, of course, joining us from BNP Paribas. Kunal, what's your take as to the market setup right now and the early readings from the earnings season?
Yeah. So on the markets, we have turned positive on the market for the last few months. And market has actually played out well. Of late, there are certain worries which are coming back into the market. You got the rising bond yields in US, which have gone to, like, say, if I look at 30-year bond yields, almost going up to 4.8%. We've also seen some worries regarding the raw material price. Crude has again moved up. So, and market has rallied. So the comfort level has reduced over the last few months compared to what we were looking at in the month of March, April.
Right.
But the theme which we've been talking about, like, of late, is not really a short-term one. We are talking about a long-term theme called affluent India, and that's something which I can talk about. Like, we've seen the income tax data which came out in recent months, and what we see is the affluent in India, which is the top 10% of the income earners, that's doing really well, and some of the stocks which we are recommending are coming from that theme.
Yeah, absolutely. And most data points seem to be suggesting that pretty much across the board. So let's first talk about discretionary consumption. Kunal, what is it that you're bullish on within that segment?
So what we've seen is, if I just go back to the income tax data, which I just mentioned about, the number of individuals earning more than 500,000, that's gone up by 5 times from FY12 to FY21. Similarly, if I look at number of individuals earning more than 10 lakhs or 20 lakhs, that number has gone up by almost 5 times over the last 9 years. And what we've been recommending is those companies which are exposed to this particular target market. So we've differentiated the market between the affluent basket and the mass market. And in affluent, there are various sectors which really fall into it. Within autos, it's about 4-wheelers. There are certain cigarette companies, there are hotels, real estate. There are various sectors which are catering to the top 10-15% of households in the market. And that's what we are more bullish on compared to those which are catering to the mass market. And mass market will include likes of 2-wheelers, FMCG, and rural plays.
Okay, so that's a take coming in. Now, since we're talking about urban consumption and urban discretionary spend, let's narrow down on the 2-wheeler and 4-wheeler space. Within autos, which are the stocks you like, Kunal?
So instead of getting stock specific, what we see is 4-wheelers is something which is doing much better compared to 2-wheelers. And we also have certain other concerns with 2-wheelers, which includes the EV disruption. In 4-wheelers, what we've seen is last year, auto companies had almost 4 million sales in 4-wheelers, which is all-time high. While in case of 2-wheelers, it's still well below where it was 3-4 years back. And we believe that this trend could actually continue. You could have the upper consumption, the affluent consumption, which is being driven by services sectors like IT, like global captives. That's something which we believe will be a structural theme. Though there is a short-term pressure which we are seeing right now, but we believe that in the longer term, that's a play which we want to be with. On the rural side or mass market consumption side, we believe that the pain is likely to continue. What you are seeing is rural wage growth, which is still in mid-single digits, MSPs, which haven't really been increasing beyond 5-6%, and CPI inflation was elevated in July, August. So these concerns will continue, and we believe that for companies which are catering to the rural segment, growing beyond the high single digits is going to be a challenge.
Point taken. Just looking at some of the stocks, and Kunal, want your take regarding Canfin Homes. Of course, the company comes out with its earnings today, and clearly the street is factoring in some good numbers. And let's also look at the charts of Bajaj Finance. Kunal, it's for you.
Yeah, okay. So for Canfin Homes, I think it's an interesting setup. The last 1 month, the stock has been trading or hovering above the 50-day moving average. That I believe could be a very interesting setup, because the stock generally, after such a kind of sloppy or consolidative move, we expect the stock to get into a breakdown mode. But that's not happened for Canfin Homes, which means that the market participants expect the stock to gradually move up higher. So Canfin Homes is something which looks attractive on the charts. Would wait out for a breakout above 780-785 mark, which is another couple of percentage points, but that could lead to a potential upside of almost 840 for Canfin Homes over the near term. Bajaj Finance and Finserv, both of them are actually looking very attractive. So even after that steep uptrend for Bajaj Finance in the last, I think 2-3 months or so, from 7,000, 7,500 to now 8,000 plus levels. Even for Bajaj Finserv, the late pickup or the recent pickup for the stock, last 5%, 6% up move, 150 points up move for the stock. I think both of them are looking very attractive. So in fact, if there is any kind of a short-term correction or a dip for either of these two names, that should be taken as a good buying opportunity.
Okay, that's the take coming in on Canfin Homes and some of the other active movers, which Kunal Vora brings me to Realty, right? Because that's where also the numbers have been suggesting that it's the affluent Indians which have been buying some premium properties. But having said that, Nifty Realty has already run up along with its constituents. You think there's still opportunity to bet on the housing demand play, maybe via ancillaries, if not via the developers?
So, Realty clearly is one of the constituents in our affluent India basket. While in the near term, there could be some pressure because of the elevated interest rates, which we've seen. Having said that, I think it's an industry which seems well poised in the coming years. We continue to see the number of individuals in the high income bracket that continues to expand, and that should expand the target addressable market for this industry.
Okay, Nooresh, what about the charts of SBI Life and HDFC Life? Is it any sort of breakout, or is it just a small one-day move?
So as of now, it's still a one-day move on SBI Life, but overall the stock has been getting resisted around the 1350, 1380 band for the last almost 1.5-2 years. Every time it has come closer to this band, it has topped out and corrected. The only case where it becomes interesting is the fact that it made a top around 1380 back in September as well as in August, but did not correct a lot this time. So the correction was only down to 1270, so a much lower correction. Indicates relative positivity, but a breakout would be about 1380 levels. So overall, would wait out for some more price action, but bias would be positive. HDFC Life, similarly, a price point is 660 to 680, which is a major resistance. If that can cross, then maybe you look at it. For now, it's a one-day move on both these names, but would be watching out if there are follow-up action over the next few sessions.
Okay, so that was about some of the life insurance companies. In fact, HDFC Bank is one stock which has been supporting one end of the market. It's one of your top contributors to the gaining side. Let's listen into what the management had to say, because, of course, there has been a lot of doubt about what happens post-merger. Is there going to be pressure on growth? Because, of course, otherwise, HDFC Bank was the stock that was giving you that consistent 20% kind of returns. Quickly on the charts of it, Kunal, if you can talk to us about HDFC Bank.
I think it's more of a flatline stock over the last 1 month. The stock has been just hovering around the 1500, 1550 range broadly. So I think 1525, 30 is a pivot point for this 30 point range for HDFC Bank plus minus that pivot support. But I think now what the stock needs in terms of either a breakout above that 1580 levels, which is the first major resistance for the stock price, or in case if the stock manages to break below the previous support, I think 1475, 1480 is the previous support for HDFC Bank. So till the time there is any kind of a breakout or breakdown above or below these levels, that's where I would believe that a trader should try and concentrate in terms of playing momentum. Yes, in terms of a longer term play, 1500, 1550 mark has been a major support since 2022-23 for HDFC Bank, and I think in that aspect, maybe it could be a good value buy at current levels. But purely from a trading play, I would like to stay away from the stock at current levels.
Now, what are we seeing on Delta Corp today? Is it what Zomato was, around 40 bucks? Is there nothing to lose from these levels?
No,
Kunal, Bothra, yeah.
Yeah, so I don't believe that it's a good time to try and buy the stock, because it's marred with so much of news flow and extreme amount of volatility. Even taking a for example a hedged trade is not possible because of the way the stock gets into this the F&O ban. So I think that's also another hindrance for a short-term trader. So just buying expecting that the news flow would probably abate and the stock may get into recovery may not be a great strategy. It is always better to wait for that first sign of a reversal or a turnaround. That could probably happen even if the stock comes back to say 160, 165 levels. So looking at the last correction from 250 levels to now 130 odd for Delta Corp, it is better to wait out for the first 20-30 rupees on the upside and then look out for more consistency.
Nooresh, what's happening to the stocks of Thermax and Ircon today?
We've seen a lot of other names in the capital goods pack do really well. Thermax was sideways for the longest period from September of last year till August of this year, broke out over the 2600, 2800 mark. So the trend is positive as such. So looking at it as a stock which could slowly and steadily continue, we'll see such moves on the stock because it's not the most liquid name as such. So we see such 5-7%, 10% moves in a little bit of a fade off, but the structure remains positive. Ircon, on the other hand, is another stock in the railway pack which has gone up spikily. So would be a little careful here. Could again pause out, but Thermax would be interesting on dips.
Okay, so that was about a couple of these buzzers in the trading session. Of course, tomorrow a whole host of earnings are expected. LTIM, you have Wipro, Persistent Systems. Today, of course, Tata Elxsi will be coming out with earnings, as well as Zensar Tech as well, and L&T Tech. So a whole host of earnings coming in. Kunal, Vora, that is from the IT pack. What has been your reading? The commentary coming in from TCS, even Infosys and the management of HCL Tech wasn't very enthusing.
Yeah, IT services results have been slightly weaker compared to what we have expected. Having said that, we remain positive on the space. IT along with financial services are the top overweights in our sector of preferences. We believe that it's a temporary blip and the structural story in case of IT services continues. The deal wins remain very robust and we believe that it's a matter of time. It can take a couple of quarters, but it's a sector which still trades at a very reasonable valuation in a fairly expensive Indian market.
Do you prefer large caps versus mid caps, or it's the other way around, Kunal?
Our preference remains for the large caps.
Okay, so that's a take coming in. As far as the IT sector is concerned, prefer the large caps. There might be pain for a couple of quarters, but post that, perhaps we'll be back on the road to recovery, given the deal wins have been strong. Kunal, Bothra, that is, within IT, which are the names that you like?
So I'll still concentrate on the mid-cap names in terms of momentum. I think Birlasoft is something which looks attractive. That's a stock which has been more consistent in terms of the price trends. The larger cap names, for example, the likes of HCL Tech is something which also looks quite attractive, and the stock has been holding up quite well. There has been a steady build-up of open interest for the stock. Unlike many of the other larger cap IT names, so there has been actually unwinding in terms of open interest, specifically TCS and Infosys pre-result. So that's a positive pattern for the stock price. And then many of the other mid-cap IT names, the likes of FSL, for example, that's also looking quite attractive.
Okay. Kunal, Vora, thanks for taking the time out and joining us today on the show. We'll let you go on that note.